All right, folks, this is just going to be not sure how quick or how long it's going to be, but I wanted to record this video at the request of someone who's interested in trying to, I guess, navigate through this market and trade, making bearish bets as it relates to technical analysis. I'm going to try to do that real quick to show you some things that you're going to look for in order to jump into this market with a bearish bet. So again, we've already established and today is July the 2nd, 2022, and we are definitely still in the bearish market. So, and within this bearish market, you're going to have these bear market rallies, which means you're going to have some rallies to the upside, which could be sustainable for a couple of days or a couple of weeks. And eventually, what I'm saying, once we start to get towards the end, we can see, a strong rally maybe for a couple of months before we see a big, washout again. But again, one of the tools that you want to really pay close attention to as we go through this bear market is the VIX. So I'm going to start out by taking a look at the VIX. I'm looking at some daily charts here since we already established that we're in a bearish market. And a couple of things I want to point out here is you want to look at pivot points on overall in the VIX and try to highlight those. So you see that I have here already marked the upper range, which is around 29, around 39. Which is a level that I think is going to be a strong level of resistance every time we see the VIX get towards a level until we get a breakout of that level. So we hit it here, close here, then close here as well. Got up here around about here, but then we reverse. Those levels I'm considered to be strong levels of resistance for now until it's broken. And once it's broken, form of resistance becomes support. And that's on anything. Once resistance is broken, form of resistance becomes support. So we establish a top zone. So right around in this area here, you can see these clusters where the VIX gets to these levels, then we pull back. Same here. VIX get around these levels, and then we pull back. Now, look for the lower zones or the support levels. And once sometimes you can notice that we establish a strong level of support, and it's like we just don't seem like we're going to revisit that level, which is what we see here in the VIX. So the VIX back around March set these lows in right around here. And since we established these lows right around here, around 18, we have not revisited this level. That level has not been revisited in a while. So what do? The VIX marches up, punches through the 50-day and 20-day moving average and starts to establish a new zone. So that new zone sets up chances for a new level of support to be set. And we established one right around this $24 level, as you can see here, has started to become a strong level of support. And also the 50-day moving average, strong level of support. So you can use those two levels as levels of support to pay attention to. Now, we've seen price action travel up to this level and start to pull back. A couple of things that you can pay attention to as the VIX starts to pull back is what does the momentum indicator show us? Look at the TTM squeeze here. You see this light yellow turns to dark blue, but the bars are like very short, and we start to see a lot of red candles start to form in the VIX. Another telltale sign that the VIX is probably in an overbought state. Let's look at down here at RSI. See, RSI got above 70, and what happens then? VIX starts to sell off. The VIX, if you ever, as soon as you see a VIX in that hits the RSI level above 70 on the daily chart, I would expect that the VIX would eventually start to sell off. So that could be a short-term indication that the VIX could see a short-term top and be ready to pull back. Now, RSI can be a definite indication as you can, tell you as to when this VIX may be ready to have a significant rally, and pair it up with things such as the full stochastics. Look at the full stochastics here. Full stochastics got to overbought territory. Didn't quite make it all the way at the top, but it started to sell off because RSI hit oversold. So it started to sell off with the RSI. I'll start to pull back, and you start to see price action accelerate the oscillator accelerate to the downside. We still have the negative line, which is the red line, over top of the green line, still showing that this sell-off continues. And RSI has not reached oversold territory yet. Look at the price action. See, price action made an attempt to get a bounce from the 50-day moving average back above it, but then quickly reverse. See this big red candle. And look at the oscillators down below. They're still not turned positive yet. So that was a sign that the VIX will probably continue to pull back. So now we got some zones to pay attention to. The zone that we're in now, which is just above 26, and then this lower trend line, which is around 24. And with the strong movement down, looking at the Williams percentage and RSI, this leads me to believe that, and with this strong red candle, this is a solid red candle, which is one of the most bearish candles here, is Marubozu. Solid red candle, lead me to believe that the VIX could definitely see much lower prices, which lead me to believe that we can possibly see the VIX test this lower trend line before we see a significant bounce. We're already in oversold, reaching oversold territory with the full stochastics, Williams percentage, and the RSI. So if we see the strong movement to the downside in the VIX, that means we're probably going to see a strong move to the upside in the regular markets. All right. So with that said, we can see a couple more days of selling pressure in the VIX, which means we can see, a couple more days, maybe in a week, of buying pressure in the overall markets. Now we have that established. Pay attention to the VIX. Watch for these support levels. Then pay attention to resistance levels. That can give you an insight as to where you can play overall market. So if the VIX is selling off, we see we still got some support to the downside. For VIX that hasn't been reached yet, then it means you can probably play the upside in this market. Now, I want to take a look at the ETFs, because ETFs is what I like to trade in this bearish market, to play these bearish moves to the downside. And we already have a well-established level of that we are in a bearish market. Let me look at something real quick. Okay. So looking at this daily chart, one thing I want to point out, and this almost makes it easy to depict when you're in a bearish market. Even if you're in a bullish market, I'll show you how price action would stay above major moving averages in a bullish market. When in a bearish market, price action only stays muted below major moving averages in a bearish market. So that can be a strong indication as to where price action could reverse. So with that said, what I established here is, and I am going to do something quite different here. So I'm not going to use this top trend line. But what I'm going to do, I'm going to erase some of this, and I'm going to leave this here for a reason. This trend line here for a reason. I'm going to show you guys what that trend line represents in a second. But I'm just going to use the moving averages as a upper level of resistance. And we may go above it every so often here, but as you can see, it's not much, and then we come right back down. So the blue line is going to be my 50-day moving average, and the yellow is going to be my 20-day moving average, which each is acting as a level of resistance. So if we don't stop at one, travel through it like we didn't stop here and go down at this point on by hitting this 20-day, we continue to go up, rally up to the 50-day, then we start to pull back. Another thing that happens on these rallies and these pullbacks is that there's the gaps that are established within. Sometimes there's the gaps that are established within price action. So that should also act as an area that you want to pay close attention to for possible reversals in the market action. Now, looking at this IWM, which is the ETF for the Russell, I'm going to point out a couple things here. Now, as we can see, we sold off. So we got this sell-off. Now price action came down to a level of support, and we got a bounce. So let me show you guys real quick. Let me back up. This level of support within this IWM is one that's a strong level of support. Let me show you what I mean by that. If I was to draw this out, looking at a weekly chart, this level of support represents the high point in the market right before the 2020 COVID plunge. So look here, we got up to that level and then we pulled back. So 9 times out of 10, so that was the level of resistance at one point, and we pulled back. Previous resistance becomes support. So that's why that trend line is showing there, because we are right back at that level, which means previous resistance becomes support, meaning when you hit that support level, more than likely you're going to see a bounce. It's a strong level of support, because when we hit that, we really, it's strong level of support. So we hit that level on the upside, we had a strong sell-off. So what could we see here? It could be a nice little bounce. I don't say a strong bounce, but a nice little bounce. The reason being not clear strong bounce, because it has overhead resistance, which is the moving average, which are going to act as a strong level of resistance. So now we got that established. Now that we have that established, let's go back to our daily chart. So we're at that strong level of support. And a couple of things you can point out here as to where price action could rally. First of all, we had a pullback to this level of support, got a bounce, and price action traveled right back up. Where to the 20-day. And look what happened. We got to that 20-day. Stalled out a bit and pulled back again. Where to, though? Back to the strong level of support. And price is starting to reverse. Okay. So that means we did not create a low in the near term. We did not come back down to these lows. That leads me to believe that we could see another nice low bounce, and it could be a more sustainable bounce that could take price action back up above this 20-day, since we already tested it, and break through it and come right back up to the 50-day moving average. I think that's where price action could definitely start to see a stronger reversal to the downside. So, and if you look at the full stochastics, we see we hit the oversold territory here, and the oscillators came out of oversold territory, and also giving you indication that the momentum wants to continue to the upside. So I'm looking for this momentum to continue to the upside, hit overbought territory, do the same thing it did here, overbought territory, and then pull back. So that should take us up where we should see price action move up to the 50-day. That's going to act as a strong level of resistance. Then we'll probably see another pullback, and then this next pullback could push price action below this level. And if we get below this level, we can probably more likely probably break this 162 level. But in order to establish a bearish position here, if you're not trading bullishly, more than likely you want to wait. Since we are testing here, we're probably going to hold that level. You might want to wait until you see it move back above this 20-day, hit the 50-day, and then start to look for your bearish positions. All the indications, because all the indications still show momentum up to the upside, and when TTM squeeze, you see the light yellow bar starting to form. Full stochastic is still pointing up. RSI pointing up. Wins percentage pointing up. But again, as you can see here, every time we have hit that 50-day, price action has reversed. So I'm looking for price action and make it back up to that 50-day, which is where you can start putting in your bearish positions and then play this move to the downside. As long as we're in this bearish market, the 20-day and the 50-day moving average, I think it's going to act as strong levels of resistance. So that is where you can establish a bearish position. And if for some reason, you decided to get in here with a bearish position, and then we got this bounce here, you do one of two things. Either you can exit the position at this 20-day, or you can just ride it out, with a longer term. And if you have time to expiration, just let it ride, because eventually we'll hit this 50-day, then come right back down. All depends on how much time you have to expiration. But the ultimate goal, if we see a double bounce here, we got a bounce here, bounce here. More than likely, that's a double bounce. We're probably going to see it move back up to the higher part of resistance, which will be right to that 50-day. Then that's when you can start to establish your bearish positions. And that'll work on any of these major indexes. Again, we first started off with the VIX, because as long as the VIX gives you what you want to see. Again, go back to the VIX. VIX hop breaks down, hit this level of support here. Then you can go look at your your major indexes. So the VIX hit that support level, and then I look over here at IWM, and it's hitting this resistance up here around this 50-day. That's a double. That's a double bonus. That tells me both. Okay, the VIX agrees with what price action is showing here. Now maybe time to play this move to the downside. But the S&P or SPY, which is the ETF that tracks this S&P, same scenario. Now this changed. Perfect bounce off this bottom trend line, and that's another thing I wanted to do too. So we can use the moving averages, since we're in this bearish movement to the downside, as a level of resistance to establish a level of support. What I would do is just look at, see if we can do it here. Yep. Since we know we're in a longer term downtrend, look at where price action is started to, since we started this downtrend here back in beginning of the year. Look at where price action has been getting its pivot points back to the upside, and use those to connect the dots. Use those to connect the dots. Get as close as you can. Got a bounce there, went up, a lower low here, and a bounce. Small pullback here and a bounce. Perfect pullback here, bounce, pullback here, bounce. So once you establish that, then all you need to do is draw yourself a trend line on the bottom to say, well, that is the more than likely area where we could see bounces. So if I did not have this trend line here, I could just establish one. Try to connect as many of these lines as possible. Close as possible. Then if you want to extend it, if you're using Thinkorswim, go to the line, hit right click, hit edit, left extension, put it on. And even if you want a right extension, you can put it on, hit OK. And there we go. You got yourself an established support level to the downside. So again, on the upside, you can use your moving averages, your 20-day and a 50-day moving average as a level of resistance. You know, we're in a downtrend, market, and establish some your lower trend, trend line on this downward cycle, because more than likely when in a downward market, you'll see prices move from the upper left to the lower right. Okay, nothing moves in a straight line. So upper left to the lower right, establish these pivot points, connect the dots, and you draw yourself a trend line, and there you go. So more than likely, every time we get down to the bottom of that trend line, we could possibly see a possible bounce back up to the moving averages, then back down. Back up to the moving averages, then back down. So again, it looks just like a zigzag motion. Up to the moving averages, back down. 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 That's how this cycle should continue to go through for a while, until we establish a bigger bounce either above the moving averages or a bigger drop below this trend line. So that's how you trade this bearish market. Now, if you look at the Qs, see the same type of setup. Same type of setup. Once we drop below all major moving averages, look at that, back up to the moving average, back down, up towards the moving average. Didn't quite make it all the way back up here just yet. Back down, and we're heading back up. And as you can see, look at the moving averages coming down right along with price. Moving averages are coming down right along with price. So again, you can use the moving averages as a level of resistance, and your lower trend line would be your level of support where you can see a possible bounce. And then again, always pay attention to the VIX as well to help you establish when we could see a bounce or when we could see a pullback. All right, so hopefully that helped a little for you to look for possible ways to jump into this market with a bearish position to get the biggest bang for your buck. Let's look at the Russell 2 as well. Oh, I'm sorry, not the Russell, the DIA, which is the diamonds, which is the ETF for the Dow Jones. Same type of scenario. Look at this gap right here. That gap fill right back up to fill that gap. And let me go to a daily chart here. Here's a daily chart of DIA. And I haven't even drawn a trend line here, so we can draw one here. Let me go to a weekly chart. Sorry. Let's go to a weekly chart to establish a lower trend line here. Perfect dots. So I'm connecting this this long leg, this long candle, this long stem, at this point, with this candle, and I can extend that. Voila, perfect downward channel, a perfect downward support level to pay attention to. Notice how I drew those down here, but yet when I extended it, look where we met that point, and those are the most two important points. That's where price action really started to go down. And looking on the upside, you can see where we have established a strong level of resistance already. Now, and as you can see, we went up, we hit this 50-day moving average, came right back down. Now, what's this solid white line represent? Let me show you. Same thing it represented or close to it. So actually, I can pull that down just a little bit because it's not exactly where I wanted to get to. But let me get rid of this. Down. So this is going to be the level I was trying to depict, which is right where the COVID high was. I'm going to make that a solid line here because that is going to be a strong level of resistance for the market. Stand by 1 second, folks. That's going to be a strong level of resistance for the markets. Let me edit this. I want to make that a solid line there, solid line there, solid line there, solid line there. All right, so again, that is going to be a strong level of support for the markets in the near term. If we break that level, then we're starting to head back down, possibly test the COVID lows. Let me do this here. And let me go back to a daily chart. And as you can see, each time we have came back down to this point, we have hit that level and bounce, So we could be in store to see another, I got it bounced there, move back up towards the 50-day moving average, which is where we can possibly see a reversal back down to the downside to test that level of resistance. And I think eventually that's probably going to break eventually somewhere. All right, so hopefully that was something that can help you understand where you can trade this market or take bearish bets. Again, you have a gap here. Look at that gap here. There's a gap here. And there's a gap here in the DIA. So more than likely what price action wants to do, possibly go up to fill this gap, which will probably take us right back up towards that 50-day moving average. All right, hopefully this is helpful. And anything else you'd like to see, just do the same thing. Send me a message and let me know. And we'll pay attention to some areas that you can possibly help you to navigate through this bearish market.